Hey guys, it's Jordan here from Coin Bureau Trading. Just a quick update on the crypto market. Be sure to watch until the end to get all of the important info. And if you're new to the channel, subscribe and let's get started. Following on from our previous analysis on this large symmetrical triangle on the 4-hour time frame, we can see that after the initial fake out, we did receive a nice breakout and retest with volume from the support and resistance flip of the upper downward sloping trend line. This did give a nice move of around 5.5%, so well done to all of the conservative traders who were able to enter as soon as they did see the impulse move coming in with a decent amount of volume. We then received a red dot trigger wave on the market cipher, and I actually did inform my community to not take this red trigger wave dot because of the Fed rate decision incoming. And of course, we know fundamentals can be more powerful than technicals, and it wasn't a good time to go short. The statistics were telling us that a Fed interest rate cut was highly likely. We did receive that interest rate cut, which did pump the charts. And then we can see that after that, the red trigger wave did play out after some confusion on the market cipher of first, the red trigger wave dot above your 45-degree line, which is what we look for, as well as your VWAP crossing and your money flow pointing down. However, as I say, not a good time to go short because of very likely bullish fundamental news coming into the market. As that news came in, we did receive a green dot, but not in the position where we like to see it for the trigger wave. Please watch the market cipher trigger waves tutorial, but we do like to see our green dot for trigger waves down underneath the 45-degree line, like this very nice last example that we did see here. We then saw a red dot, but not above the 45-degree line where we like to see it. And now we see this previous trigger wave playing out, but with some heavy volatility and drawdown, which is why I did recommend not to take this short trade. Now we can see Bitcoin price on this 4-hour time frame coming back down towards this last support and resistance flip on this downward sloping upper trend line of the symmetrical triangle, now flipped into support. We have front run that level, so let's see if price comes down to test it again. My advice at this time would be to be very patient, as once again we are seeing wave trend very close to the zero line. This is a time to hold your horses and wait for a better signal on the charts, which would be wave trend coming all the way down to the 45 or possibly going back up. There are a few different scenarios that could play out here. We could get a very nice trigger wave down at the bottom, which could mean a very nice bullish move. Or because momentum came nice and high, what we could see is higher prices and lower momentum and a nice bearish divergence on this 4-hour time frame to drive us down to lower prices. Very important for everybody to take note of is our new campaign with WEEX. And really, it is very easy. WEEX is making it super easy for us. For the first $50 futures trading bonus, all you have to do is deposit $100 and trade a $10,000 volume. A $10,000 volume might seem like a lot, but actually it's really easy to achieve by using leverage. You can then also see that you can earn another $80 trading bonus simply by depositing $500 and reaching a $20,000 volume. This also then goes up for those traders who have access to higher margin to deposit $1,000, reach $100,000 in volume, and receive a $100 trading bonus. If you are a futures trader hitting higher volumes, you can see here that if you hit a $10 million volume, you can claim a $1,000 USDT bonus, right up to a $12,000 in total if you manage to climb the ranks of all of these volume levels. Zooming out to the daily time frame, there are a few important things that I would like to share with the community. Number one, and this is usually the first thing that I draw on my charts, there is a full tutorial on this on my personal trading channel. It is my featured video and it is giving a lot of really useful info. This is the fixed range volume profile, and I would recommend taking this tool and drawing it in over our entire current range, which is a very large range all the way from 76 up to 125K. I would actually recommend drawing it in all the way from 62K on the 10th of October 2024 all the way to current price action and all the way at the top. Already we can see how important this is due to the very nice move that came in from the value area low. You had two opportunities here to enter at the value area low, and now we are seeing price trending upwards towards the POC around 96,600. For those of you who aren't aware, the POC is your most traded volume within this range, and it is the most important level. It is not a level to take trades from, but it is a level which gives us a lot of information. Are we going to be rejected by this level back to value area low for a rinse and repeat of the possible long trade, or are we going to lose POC to move towards the value area high and look for those short trades up around all-time high? One of the really beautiful things that the fixed range volume profile does for us is it identifies our high volume nodes, which are horizontal support and resistance levels. You simply take your horizontal line tool and drop it in at these spikes on your fixed range volume profile. While you're dropping in these levels, you will see that they are the most significant support and resistance levels. Already by dropping these in, we can see the current levels that we are being rejected by. We have wicked twice to this 94,435 high volume node level, and now we are rejected below this 91,500 high volume node. We can clearly see where the major support is below us at 87,500, and above us we would need to break POC, and if we do, we can see that it could be a very smooth ride up to this 101,000 level, given that there is not much volume traded between these two high volume nodes. If we are able to break this 101k level, the next level would be 104,000, and then we can see what we call a high volume node zone. If you see spikes on your fixed range volume profile coming to similar levels, take your rectangular drawing tool and draw in a zone. Pull it out all the way to the right. Here we can quickly see how important this zone is, and we can see that in order to enter value area high and threaten an all-time high, this is the zone that we would need to break. Also very important to note are the high volume nodes within the value area low. We can see that we did front run this high volume node at 79,000, and as I've explained before, a front run of a level could mean that we go to sweep that liquidity properly in the future. It's also very important to note these other high volume nodes below, and in my opinion, most important to see that there is a lot of volume traded at the 67,692 level, which is still sitting within our value area low, and this level is actually a possibility. So I'd urge everyone to stay realistic and logical in that we could visit that level. In fact, that level could be a very nice opportunity for us to print a massive bullish divergence if we do put in lower lows in price and a higher high on our momentum. This would be a classic bullish divergence for the books and a great trading opportunity. Another thing that we're seeing very clearly on this time frame is the formation now of an ascending triangle. We can see the upper resistance zone somewhere around this level, and we can see the upwards sloping support somewhere there. The ascending triangle is very often a continuation pattern of an uptrend, but it can sometimes be a reversal pattern of a downtrend. Because we are climbing with higher lows and consistently retesting this resistance, this can be a very bullish pattern, and it might allow us to build the momentum to break through these very strong volume nodes and push up to our round mental level of 100k. To trade this pattern, you can entertain taking long trades from the upward sloping support, but make sure that you have at least 5 levels of bullish confluence on those trades. There is also the potential for a breakout trade on the retest, but again, make sure that you are finding confluence with at least 4 other indicators.